you sell basketballs, ticket to the basketball game, or pom-poms and other sport-related paraphernalia, businesses of all sizes and variety need a bookkeeper, an accountant, or ideally both. Today, we're breaking down the differences between bookkeeping and accounting and figuring out how both of these services can help small business owners in the long term. Hi, I'm Bianca Rivera, Accounting Manager from BPS and Outsourcing Division. Join me for an insightful discussion on accounting concepts and best practices. It's easy to confuse bookkeeping with accounting because the two share commonalities. Some people even use the terms interchangeably when talking about their business finances. The confusion is only further emphasized when you consider that accounting software plays a huge role in automating both bookkeeping and accounting processes. In reality, bookkeeping and accounting are very different things. At a broad glance, a bookkeeper's responsibilities are mainly transactional, focused on gathering and entering financial transactions. In contrast, an accountant's responsibilities are analytical and are focused on financial performance and using information to help you better manage your business. But what exactly do you mean by these definitions? Let's take a closer look on what each role does to better understand the difference in their responsibilities. To start off, a bookkeeper focuses on the proper recording of your financial transactions. They are also responsible for a variety of duties which are important for maintaining a successful business. Bookkeepers are essentially in charge of making sure you get paid and what you pay your dues on time. They track customer payments and write invoices so that you know which customers you still need to charge. They also review and organize transactions, such as your incoming monthly bills, and prepare them for payment to help you maintain a good relationship with your vendors. Bookkeepers are sure to lighten the administrative load of any small business owner, as they oversee the often overlooked task of running a business. They have a to-do list that ranges from making sure your monthly bank account balance is error-free, accounting for all the little details you might have missed in your month-end adjusting entries, to preparing financial statements before it's then analyzed by an accountant. They can even take charge of your business petty cash account if that's available. Bookkeepers have a long list of valuable tasks, and sometimes their jobs overlap with those of an accountant too. But before you write off the need for an accountant, let's talk about their role in growing a business. As we mentioned before, the brunt of an accountant's responsibilities lies in analyzing the information recorded by the bookkeeper using accounting principles. In the first place, accountants prepare financial statements too. Where bookkeepers run the more standard reports, accountants can run these reports along with the balance sheet, income statement, cash flow statement, and other reports they deem necessary. It's also an accountant's job to understand what your business transactions mean. Accountants look at everything from your monthly expenses, monthly income totals, historical data, and the amount of cash your business has on hand. They take all this information and analyze it to spot important trends like your business overall profitability and to suggest ways to improve business performance. They look at the big picture and can provide businesses with the advice on how to bring in more revenue, cut expenses, and make your products more profitable, among other things. They can even plot out when it is the ideal time to expand the business with minimum risk. Best of all, accountants provide so much value when it comes to tax deductions, tax planning, and ways to reduce tax liability so that your business can have a lower annual tax bill. So, it's not the bookkeeping and accounting are totally unrelated. They both deal with financial transactions. They both make use of the double entry accounting method, which we covered in our first vlog, to mean that for every debit entry you make, a corresponding credit entry must also be made. They are also both essential to small business operations. But that's where their similarities end. The differences in their scope and responsibilities mean that they're useful for different circumstances. If you need help with the nitty-gritty of everyday transactions and payments, hire a bookkeeper. If what you need is budget forecast to start growing your operations, having an accountant on call would be better. Most small businesses can get by in the early stages using a bookkeeper, as a skilled bookkeeper can perform many of the same tasks as accountant would. However, the ideal is to have both. The value accountants bring to the table is nothing to scoff at, and it's always a good idea to have an accountant to review entries, look at cash flow, provide any feedback on the performance of your business, including cost-cutting measures and other suggestions. Remember, there's a place for both bookkeeping and accounting in your small business. While accounting software certainly makes the bookkeeping process a lot easier, it requires a different set of skills and knowledge to handle accounting for your business. Thus, both bookkeepers and accountants are essential for small businesses. In either case, familiarizing yourself with bookkeeping terms and accounting basics can certainly go a long way toward making the process easier. That's it for today's vlog. Join us again next time as we explore and learn more about accounting basics and best practices. Don't forget to like and follow Pinny Grant Thornton's social media channels for updates on our next episode as well as our upcoming events. Till our next session, I'm Bianca Rivera signing off.